Good afternoon, everybody. Scott Riley, the Market Update Desk. It is December 18th, and MLS number 157524. We got a lot of green, which is positive, going on in the market today between mortgage-backed securities, treasuries, and Dow. All of them are doing very well today. Let's go through on why we're better in those numbers today. So the BLS released their November CPI report, and that shows the 2 month change from their last release of September. Now, the headline, all in inflation, rose at 0.2% or 1/10% per month the last 2 months. What that did was send year over year CPI headline inflation down or decelerating from 3% to 2.7%. This was well below what any of the market estimates were looking for. Energy prices, in particular, helped us. They did rise 0.55% on average per month, but that was lower than expected. And in addition, we've seen WTI crude oil the last couple months start to decline. So that's going to help future reports as they come out. Now, the core rate, which is closely looked at by the Fed, what did that do? That rose 0.1% for each October and November. This also was much lower than what any of the market estimates were out there. It brought year over year core inflation for CPI from 3% to 2.6%. Very good numbers. Let's talk about additionally why this deceleration in inflation. Specifically, shelter, which makes up just under 44% of the core index, only rose 1/10% for the last 2 months. Year over year, it fell from 3.6% to 3%. Now that's a very healthy drop. Now the wild card that we always see is lodging away from home, the component within that shelter cost, and that fell sharply by just over 8% over the last 2 months. That helped a great amount. Now, on this news, bonds rallied, like we talked about, on the cooler inflation. And the Fed doves, like Stephen Miran, who's been talking about additional larger Fed cuts, probably are taking a little bit of a victory lap as shelter is now finally catching up, and we're seeing substantial effect within the downward inflation numbers. Now, while shelter has made up a lot of progress in this report, there's still some more to go. And why? Let's talk about it. The Coality Single Family Rental Index for October, that's a very real time index, showed that new rents rose 0.9% year over year. That's down from 1%. So a little bit of room there. Uh, this is the fourth month in a row we've seen a decline, and in fact is at a 15-year low in single family rent growth. And this report measures single family rentals, which have more power than the multifamily within this report. Many of the other new rent reports out there are showing negative figures year over year. This should continue to help us as we move forward with inflation numbers. Um, and a lot of this also flows into the PCE report. So we could be heading to a very healthy PCE report, which would be a nice welcome uh, relief, especially in the bond market. So initial jobless claims came out today, showed that initial claims fell 13,000 to 224,000. Continuing claims rose by 67,000 to 1.9 million. Now that bounced back from the previous week of declining continuing claims. It's showing that once you lose a job, it's harder to find one, and that you're staying on continuing claims for a lot longer. Now, the 10-year Treasury, what has it done? If you remember 3 or 4 days ago, actually late last week, we topped out at 4.21%. We've fallen based on this inflation news down to 4.116. That's a 10 basis point drop in about 4 or 5 trading days. That's a nice, healthy drop. In fact, we're trending towards our bottom line resistance level, which is a Fibonacci level of 4.08%. Maybe, just maybe, we can bounce beneath that and hold every time. We've talked about it time after time. Every time we get close to that 4% or break slightly under it, we bounce back. Let's see where we go from here. Mortgage-backed securities are up 11 basis points to 101.3. The Dow I talked about earlier, I just when I looked last, that was up 250 points. So it's a positive day in the market, which means good news for mortgage rates, which means good news for you. Give us a call. We'll walk through numbers with you, help you understand what's going on in the market, look at the best opportunities for loan programs out there. Give us a call, 616-293-2189. The Market Update Desk, your original singular market news source for West Michigan, 616-293-2189.